Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to cover 5 stocks with ex-dividends next week. These ex-dividends are on Monday, Tuesday, and Wednesday. So of course you want to purchase these by Thursday and Friday of this week at least. You must own them. One of them you must own before Monday, so of course you'll have to purchase it before the end of market Friday. So let's go ahead and jump into it. We're going to be covered whether they are overvalued or undervalued for the year, and then go in and take a look at its 1 year and 5 year growth or loss. Take a look at its payout ratio and its dividend history if it has an upwards paying dividend history. So these are very you'll know the names, of course. They're very well-known companies. So the very first one is Target. And this is a retail company here. Its ex-dividend is on Monday, August 14th, I believe. Let's take a quick, yep, on the 14th is its ex-dividend, so you will need to own this one Friday. Taking a look just straight at its dividend, you can see that it has paid dividends for well over 20 years. Back prior to 1990, it was paying a nice yield, and you can see that it's very slowly increasing. During the 2000 crash, the 92 crash, there were no pullbacks on the dividend pay. Into the 2008 crash, they did not do any sort of cuts. They actually increased their dividend payout. You can see that it was increased dramatically after 2010. That was a giant leap, and has been currently paying out 0.62 per share, it looks like. We can take a look at its, let's go back to its 1 year. That's what's important here. So for the year, we can see that it's currently trading at a very high yield compared to its normal, its average for the year. And right now it looks like maybe the average for the year would actually fall at somewhere in the 3.5 range. Earlier in July, it actually peaked off at 4.79. And for the last 5 years, let's see here, let's take a look at just the price. It's had some up and downs. So we'll take a look here on Google Charts and take a look at what's been its 1 year and 5 year return. It's actually looked like it's been on a negative trend for the last 1 year and then for the last 5 years. But it did bottom out here right around the $50 range, and has actually increased to $57. So if anybody purchased it at that $52 range, they would have got a really high yield at 4.7%. So let's go take a look at the stock here. So the ticker symbol for Target is TGT, and we can take a look. We'll just look at its quick jump that it's had in the last once it bottomed out here at $50.18, it had a recovery of over 15%. So very nice recovery. If anybody trusted it at this bottoming point, they would have made a profit, a nice profit of over 10%. So that's a really good profit, especially with that high dividend payout. And I don't see Target going away. They might continue to close up a couple different stores, but eventually they'll get to a good balance, and they'll probably end up changing their strategy to compete with Amazon and so on. So taking a look at their 1 year, they are actually down 20%, but they are recovering again, so that could come back up. They've already recovered 15% at the bottom point. So again, for the 1 year they're down 20%, but if you would have bought them say at the bottoming out point or at a point back in March, you would actually be up right now, along with the dividend yield. Again, for its 5 year, it did look like it was on its downward slightly, so it is down 7.9%. But if you had bought into them back in 2012 with a dividend yield of nearly high 3s or 4%, you would have easily recovered that loss of 8%, and with the dividend payout you would have been able to buy continued shares of Target, which would actually increase your dividend payout during this time. So that's a quick look at Target. Let's take a look at its finances, whether it's done really good earnings, and Target has met earnings 3 out of the 4 past quarters. It's actually scheduled to release earnings, looks in third quarter, so I think they might be doing earnings next month or later this month. Let's see here, August 16th, so yes, actually right after their ex-dividend date on the 14th, they'll have their earnings release on the 16th, and you can see that they're estimated to actually be a little bit higher than in the past, and they have actually beat their estimated earnings by quite a margin. So I bet they will continue to beat their estimate. Let's see here. They have some important statistics to look at here. Is what their trailing average is for yield. So it's 2.84 is their 5-year average yield. Right now you can get them at a 4.15, so that is a great buy. Even for their annual trailing yield at 4.02, you can grab them at 4.15, which is very, very high for Target. That's basically it that I want to take a look at here. I want to just take a look at their earnings and their statistics, and then we're going to take a look at their payout ratio and what their history is of dividend payout. So they do pay out about 56%. That's actually over, so under 60. It does meet my criteria of under 60% payout ratio, and they have continued dividend growth for 49 years. So very, very long time. So if you had bought Target, they would have had a really nice dividend yield back in the past, plus they would have been increasing their dividend payout for 49 years. So that compounding over years and years would just be amazing. So it does have an annual growth of around 7.4%. To me, when I did the math on this, and to get your yearly growth, they just increased their dividend payout to 62 cents. It was at 60 cents. You can basically, to get the average for the year, is you take what they're currently, or what they had been given out in the past, so 0.60 minus what they were paying out in the past year, 0.56, and then you divide that by the past year, and you get a decimal, which you times by 100, and so they have a yearly growth of about 7.14%. So that's pretty spot on here with their annual growth in 2016. So around 7% growth per year for their dividend payout. So that's pretty nice. Okay, the next stock that we're going to be talking about, so Target was rated as undervalued by me and could see some continued growth potential in the future. Next one that's coming out next week is Microsoft, and of course I am a investor in Microsoft. I do own some shares of Microsoft, and taking a look at their 1-year chart here, we can see that they are currently overvalued. Their price is up in the $72 point. They actually their yield is 2.11. Their average yield is usually around 2.3%. So Microsoft is in a nice upwards trend right now, and that's really good, but it could come crashing down. Taking a look at their dividend in the history, we can see that their dividend payout, that's their price. Their dividend had a big spike in 2004. That was probably a special payout. We'll probably take a look at that on the dividends website, but then they have had continued payout since then. So let's go ahead and jump into taking a look at their 1-year and 5-year. So Microsoft's ticker symbol is MSFT, and their ex-dividend date is on the 15th. So you must purchase the stock on Monday and own it by Tuesday morning when the market opens. And let's take a look at their 1 month. So they are on an upwards trend again, up about 4% in a month. In a year, they've jumped a whopping 24% in a year, and in 5 years they have growth of 138%. So that is very, very nice. They are price to earnings is a little bit over 25. When I bought them, I believe I bought them below a 25, but they have been trading upwards So right now, if you bought into them, their current price to earnings is a bit steep. So good growth though for the last year and 5 years. Let's go take a look at their summary, whether they've met earnings. Whoops, I spelled that wrong. MSFT. So they really beat earnings in the second quarter of 2017. Estimated at 0.71, they beat it at 0.98, so huge. Their next earnings are reported on October 30th of 2017. So that's the last quarter here. I think it was like a week or two ago they reported earnings. So they're not reporting earnings for another 3 months until their next quarter. So their current yield is 2.15. Let's go take a look at their statistics here. And we'll take a look at their 5-year average dividend is 2.57. So you can see that 2.57 is very much below what they're currently offering, which is 2.11. And right now their trailing yield for the year is 2.10. So their 2.10 is what its annual trailing would be, and it's currently at 2.11. Its forwarding yield is 2.15, which means they might have an increase here towards the end of the year. Possibly, I haven't looked at that. And yeah, they have beat earnings, and they did really good in their statistics. Overall, I think Microsoft is still a little bit overvalued, but I'm a holder myself, and because I think it's actually positive for me now. So let's take a look here. They only pay out 48%, so that's well below the 60% payout ratio that I like to buy stocks at. They've had dividend growth for 13 years. Dividend growth and paying out dividends is a little bit different. A company can continue to pay out dividends year after year after year, and still, it's not bad. But this is a company that has continually increased their dividend payout. And of course, their ex-dividend is on Tuesday, so you want to own them by Monday. And this one actually has a much higher annual growth rate for their dividend growth. It's actually 14%, so that's a little bit higher than Target's 7-point range. And we can take a look here that they are currently paying out 39 cents a share, and this is actually a relatively cheap stock at $72. So they pay out $1.56 a year for each share of $72. So that's a pretty nice price. And so good growth, good dividend growth last 13 years. Actually, I wanted to take a look at the recession period here. We noticed that there was a huge spike, and there it is. That is the special payout right there. They paid out $3 a share, and they actually had a stock split. And if we move over here towards the stock split, we can see that the reason that they've only been paying out dividends for 13 years is probably, actually that's the only time they've been paying out. Since they started paying dividends, they have had continued growth. So they've never cut their dividend. They did a stock split, and then you were paid out 8 cents for each stock that you held. So they did a stock split 2-for-1, and then they had a huge $3 payout for each share of their stock. So Microsoft is a great one to own. Really good, especially Bill Gates is in charge of it. Just hit #1 richest man in the world. So Microsoft. And next one is Honeywell, which is ticker symbol HON. I thought this one may have been Honda, but I was wrong. So Honeywell is another one that's doing a very good upwards trend right now. It's trading at $139. Back in early of January, it was trading around $117, so it's had really nice growth this year. Early November, it was at basically almost at $100. So its highest yield in the last year has been 2.21%. Right around 2.21, 2.27. It's currently trading at a 1.87. Let's take a look at its dividend history really quickly here. So they have had to cut their dividend here, or maybe they did a stock split and cut it right there. And they cut it previous. Let's see, this was probably in the 92 crash. They cut it, or they did a stock split and then cut their dividend payout, and they had a bit of a dip right there. So other than that, they went stagnant between 2000 recession and 2005, and then again in the 2008 recession. So this isn't a company that cut their dividend, besides right here, but I'll have to take a look at that once I get on the dividends. But during times of recessions, they won't cut it, but they won't increase their dividends either. So that's a good chart right there. So let's go ahead and take a look at their 1 year and 5 year. So in the last month, they have been moving in an upwards trend. So when I looked at their chart, they have been moving in an upwards trend. For the year, they're up about 20%. And for their 5 year, they're also up 135%. So right along with Microsoft. Honeywell is actually a conglomerate, and it says that it produces a variety of commercial and consumer products, engineering services, and aerospace systems for a wide variety. So I've never really looked into Honeywell myself, but it looks like they have a couple subsidiaries of Honeywell Security and Honeywell Aerospace. So it's actually an interesting company that I've never really looked into too much. But that's why I like doing these ex-dividend videos, because there's a lot of companies out there that I myself have even checked out. So really good growth for 1 year and 5 year. That could continue on. And their ex-dividend isn't bad, or their dividend history isn't too bad. They have had to stop paying dividends during times of recessions, but they have never really cut it. So far, we haven't verified. As far as earnings, they have done really good earnings. Same with Microsoft estimates. They have very similar to Microsoft's earnings. They were estimated at 0.71. They beat it at 0.98. Their next earnings is again October 30th. Oh, this is Microsoft. No wonder it looks just like Microsoft. Okay, so we'll take a look at actual HON, Honeywell, and we can see that they have actually beat earnings for the last 4 quarters, so great. They've actually met earnings, and their growth isn't down, which is important to notice in their earnings. Their earning potential is pretty stagnant. It's consistent. Consistent's a better word. It's not going down. It's not going up. This is a pretty consistent company. So you put your money in, and it's on an upwards trend. So this might actually be a little bit overvalued for what it's currently reporting. So its EPS, I'm sure when we took a look here, actually its price to earnings is pretty decent, under 25. So it's 21.54. Taking a look at its statistics, we can see that it has a 5-year average dividend of 2.03. So it is overvalued. It's currently yield at 1.86. So this one might need to cool off a little bit before jumping into it. Just my opinion. And 2.52 for its annual dividend rate. So let's see here. Yeah, that's all good information there. And this time I'm actually going to do a search for it. So Honeywell. So they're $139. They had a positive day today. Aerospace, defense products, and services. So this could be a good company, especially in a war. Even during, I don't know about recessions, but looks like they had to halt their dividend growth. Their dividend payout is actually really low, 37%. So I'm not sure why they would have to cut out their dividend pay during those recession periods. They pay out such a low ratio that their earnings should be able to maintain increasing their dividend payout. But we will take a look here. Of course, this company you will need to own by Tuesday, so you will need to purchase them on Monday. You will need to actually own the stock on Monday when the markets open on Tuesday. And taking a look, they're right up there with Microsoft, having annual growth of 14.1%. And I'm going to take a quick look here. So the reason they cut their dividend, this is reporting that they have dividend growth for the last 6 years. And what's here is they did actually do a very stagnant time between 2008. They had a little bit of a growth there, 2008 to 2009, but then they continued. No, it looks like they had some growth there. So I'm not sure why their chart's showing only 7 years. But they did do a stock split, and then they increased their dividend. They did a 2-for-1 stock split in 94, 2-for-1 stock split in 97, and then they increased their dividend payout by quite a bit. They had to cut it back in the 2000 recession. But you can see here that if we zoom into this period, they did very quick. They had multiple payouts, and they paid out 28 cents, and then they paid out 15 cents. So it looks like it was quarterly. They had like 2 quarterly dividend payouts. So if this sort of thing continues sometime, this could be a really great stock to own. You know, it's an aerospace company, and yeah, looks like a very nice company. It's up for you guys to decide. So that's our third one, and then the fourth one is Heinz, Kraft Heinz, and ticker symbol is KHC. And we can take a look here that it is on a very weird looking chart right now. Let's see here. I like that. So we can see that its current dividend is 2.78. Its highest dividend point was around 3 point, and the about 3.6 this year. So very high yield back in early November. Back in November through January period had a very high yield. Since then, it had a nice growth period between till March, and then it's been sort of on a downhill up until early July. And then once it hit July, it looks like it's kind of creeping. So it's kind of following along with Target, it looks like. And taking a look at their chart just really quickly on dividends, they have had some. They've only actually started paying dividends, it looks like, since 2016. I believe they split off from Heinz and became Kraft Heinz. So don't quote me on that. Let's go take a look on Google here, KHC. Let's take a look at their 1 year and 5 year. So it looks like they've been pretty stagnant for the year at 3.25% increase. So if you bought into them with their dividend yield and payout, you maybe broke about even depending on where you bought into them. If you bought into them exactly a year ago, you'd be down slightly. But if you bought into them at one of their lower points where their yield was really high, and you saw that they were undervalued and provided a good payout, you could actually be up about 8% with that dividend yield, averaging probably around 10 or 11% for the year. 5 year, they're at an increase of 12%. So you take 5 years, you divide it by 12 by 5 is less than 2%. So they've had very low growth in the last 5 years, but it's not. This isn't a 5 year. You can see the period is 2 years between July of 2015 and August of 2017. So this is only 2 years. So this is not bad growth. Say 12% for 2 years. That averages around 6% with their dividend yield of around 3%. That averages around 9% return per year. And then you get your dividend pay, which you'll reinvest into the company, which will actually increase your dividend payout, which increases your overall payouts, and your ratio increases. So let's go ahead, and hopefully this video isn't going to be too long. I see that it's in the 23-minute range, so I'll try and speed it up here just a little bit. So 5 year is not optical, hasn't been around 5 years. Trailing 2.38, currently trading at a 2.78. So it's actually decently bargained. Has an annual yield of 2.87, meaning that they might increase their dividend here towards the end of the year. Taking a look at their statistics here, we already did, and their earnings. Why is their earnings not appearing? Okay, now it's just going slow. There it goes. Nope, not going to appear. You are not very helpful there. Okay, so we're going to skip that. Let's go to dividends.com and KHC. KHC has dividend growth for 3 years. Payout ratio is over 60%, so this wouldn't be one of the ones I invest in myself. This might be one of the riskier ones that might have a lower growth potential. So we'll notice it here in a minute when we get down there. Ex-Dividend is on Wednesday, so you need to purchase it. I believe that's Wednesday, the 16th. Yeah, it's Wednesday, so you need to purchase it by Tuesday. annual growth is, oh wow, that's 31%. So actually really nice annual growth. That's really crazy. I didn't expect that. I'm not sure here. Oh, they just increased their yield. That's why their forward yield shows a little bit higher. It's because they increased their yield. So they were at 57. Now they're at 60. So I'm going to just quickly type that in here. 0.60 minus 0.57 divided by 0.57 times 100 is 5.2. I'm not sure where they're getting this 31% annual growth for their dividend growth. Not sure where that 31% comes from. But, okay, if anybody knows that number, go ahead and leave a comment in the comments below if you know why. And of course, our last one that is paying dividends next week is Walgreens. And this one's kind of funky. It's had a lot of ups and downs this year. This is one I've been looking at that could be a swing trade if I did that sort of thing. So you can see that it was very low at the beginning of July. Its yield had hit at the very peak of around 1.95%. And then it's on its upwards trend right now. So it might swing all the way back up to about $85 and above, and then swing back down. Let's take away everything besides the price. So we can see that it hit around $77, then swung all the way back up to $87, then swung down to $81, swung up to $87, down, up, down a lot more. So this one could swing back up into the we'll say it, $85 range, and then swing back down into the $70 range. So this could be one that I could purchase, and I could see it probably increasing back up at least to the $85 range is what it's always went past. So I could sell off at 85 just to make sure that before it comes crashing back down, I would sell off at a peak. And so it is undervalued right now. It's currently trading at 1.85. Actually, it's not it is slightly undervalued, but not completely. This is just a very risky stock. With all these swings, it's not consistent. And let's take a look at its 1 year and 5 year, and just what did I do here? I typed it incorrectly. WBA. So 1 year, it has growth. It has a loss of 1.48. 5 year, it has a gain of 6.95. That's terrible for 5 years. That's basically 1% a year, so you'd be losing with the inflation rate. And let's see here, for the last month or so, they're kind of on a downwards trend for the 3 months, down 5%. They've been doing some stuff with Rite Aid to try and buy some of their stores. Rite Aid has a lot of debt, and Walgreens would be acquiring some of that, I suppose. So this may not be a very risky investment if you chose Walgreens. Let's take a look at their summary and then take a look at their statistics. So they have met earnings for the past 4 quarters, so that is nice. They have been sort of on an upwards trend. You can, if you did a line right here and shot it from here to there, everything could be expected to continue along the line. Let's see here, statistic wise. Oh, let's take a look at their earnings here. Their next earnings in October. Their 5-year average is 1.94. They're at 1.85. So they are a little bit overvalued right now at this time. Plus they are really risky with that whole swinging thing going on and buying Rite Aid and such. So this wouldn't be a company that I would invest in myself. Being a retail store and having just lots of competition out there these days, especially Amazon, which is just tanking everything. Let's see, it has a very low payout ratio, 31%, so that's actually pretty nice. Dividend growth for 41 years. This one pays out on the 16th, so again Wednesday, so you do have to own it Tuesday. Its dividend growth is 5.4%, it says on here. and we can see that it had an increase to 40 cents from 38 cents, and previous to that it looks like a steady 2 cents increase. So if we took our calculator and did 0.38 minus 0.36, that would get us 0.02. Then we divide that by what was it here, 0.36, and then we times that by 100. So yeah, it has an average growth of 5.5 for its dividend growth, and it looks pretty consistent. You can see that it's increased. I had a nicer one right there, that's 4 cents, but ever since then it's about 2 cents, which is about an average of 5.5% dividend growth per year. So that is it. This one, it looks undervalued. So Microsoft was overvalued. Honeywell, I believe that one was overvalued. Kraft was overvalued. So all of these were overvalued right now besides Target and Walgreens. Walgreens I would not consider. Target, it could be a potential buy back earlier, and it does look like it's swinging back up on an upwards trend, so they might be changing it up. Of course, all of these stocks you have to investigate. If you're putting your money into them for the ex-dividend and the dividend payout, you have to make sure that their stock will rebound and continue up. That way you don't lose more than their dividend payout is going to be paying out next week. So that is it for this video. Hopefully it wasn't that long. It was 31 minutes. This is one of the longest videos. I hope you all enjoyed it. If not, go ahead and let me know in the comments below. And if you did like it, hit that like button. And if you would like, subscribe to my channel for future financial videos. If you have any questions or just want to say hello, please leave a comment and I will always reply back to you. Thanks for tuning in, and I will see you next time. Bye.